These stocks, the Microsofts, the Apples, the Teslas, the Amazons, bottom out dramatically before we can say the floor is in?
Well, Tyler, over the last year, investors' focus has been on downside risk. What can go wrong? Where can the market go to the downside? And there comes a point in every bear market or in every cycle where investors need to pivot their thinking from downside risk to upside potential. And I think we're approaching that point in this current cycle. Now, why do I say that? How do we know we're at that, potential pivot? Well, when we go back and we study bear markets, one common characteristic of all bear markets is you need to see the largest, the strongest stocks out there. You need to see those names become completely washed out. The highly speculative names, that's typically the first domino to fall. And then during bear markets, there's safety in these large mega cap sort of names. And real capitulation doesn't happen until you've seen washout conditions from the largest mega cap names. And markets can't bottom until you see that.
Take me back then, JC, if you might. As you're using historical allegories, take me back then to, let's say, 2000, 2001. What were those superstar stocks that had to wash out? 2007, 08, 09. What were the stocks that had to wash out before investors became confident that maybe the bottom was in? Do you remember?
Absolutely. I mean, some of these names are hard to forget, right? I mean, the tech top, you had GE, you had Cisco, you had Microsoft, you had Exxon. These were the largest names out on the street.
And
Dell. Those are the names that,
yeah,
exactly. Right. These were the names that held up the best until the final innings of their bear market. And as soon as you start capitulation in those mega cap names, that's when the market was able to bottom. Similar thing happened in 2007. The largest names at the end of that bull market, when those finally capitulated in 2008 and early 2009, that was when the market was able to find its footing.
Okay, so take Apple out of it because, it may have fared better than some of its other big mega tech names, competitors. But if you look at Meta, if you look at Microsoft, if you look at Amazon, oh, how the mighty have fallen. So what do the charts tell you? Does the chart say it's time to get in? Or do you think, no, it's still time to sit on the sideline and wait for all of this to shake out a little more?
I still think we need to, sit on the sidelines. I still think there's more downside risk in these mega cap names. That doesn't mean downside risk in all stocks, right? The average stock is actually doing much, much better than these mega cap names. But, going back to the study that we ran looking at these mega cap names and how they fared in bear markets, one common characteristic was as soon as the bear market started to, find its footing and stocks started to move higher, the mega cap names did not participate in the upside coming out of a bear market low. So for right now, we're of the opinion that leadership will change, and leadership has been changing through bear markets. So the names that held up the best within the bear markets, the Apples, the Teslas, the Amazon, the Googles, those are not the sort of names that you want to have exposure to coming out of a bear market, because they typically underperform on an absolute and a relative basis.
So, JC, you're also recommending that people walk down the ladder in terms of market cap. You're saying that small cap technology is holding up better. My question is, if it's holding up better, is it as good a deal?
I think we saw a lot of it coming out of the small caps, right? If you look at the indices, Russell 2000, use that as our benchmark for small caps. That peaked out months in front of the S&P 500. So a lot of the selling pressure has already transpired. It has already taken place. The last seller has already sold. So I really think that, we call it the FIFO method of bottoming, right? The first to experience weakness should be the first names to start the recovery. And small caps were the first market cap area to see the weakness. So we believe they should be recovering first. And we're actually seeing that on relative basis, right? Small versus large across different sectors. Small is doing much, much better than large cap.
FIFO, I like it. It's pithy, it's catchy, it's memorable. JC O'Hara, thank you.
Thank you.